In this video, we're going to talk about what I like to call a wave pattern. A wave pattern is where stock price pushes up and sells off to a higher low. Okay. Now, why does this work? Mark Douglas teaches us for stock prices to move higher, all the previous orders have to be flushed out first. So this is a perfect way for market makers to push price up, flush it down, clear out all these orders, so the stock price can move higher. Okay? And typically in a good wave pattern, we're going to see a retracement to a hard stop line, what I like to call, to the 28.2 retracement line. Now this is about the lowest a stock will go, and it frequently stops on this 282 retracement level. That's why I have it in red. And you can see this in all different time frames, intraday, on the daily chart, 20-day 1-hour chart like this one. So I find it very useful to visually identify setups. Okay, so we have a good push up and sell off here to the 28.2. Also, I want to mention another drawing tool called the regression line. Now the regression line plots a center point in any upward or downward channel. And when we start to veer away from that regression line, usually a bounce off the regression line can indicate that we're moving out of that downward channel and possibly into an upward channel. So let's go into a smaller time frame. Let's go to the 3-day 5-minute chart. We can see that we have another wave pattern. We push up and sell off, coming down to a higher low. So let's measure our retracement levels from high to low. We can see that again we're coming down to the 28.2 level. These candles dip below, but these wicks get bought right up, and at neither point do we close below the 282. Okay, so now that we've visually identified our wave pattern, what can we do with it? Coupling this with our other theory, we want to see our downward swings getting smaller, coming down to a higher low. So if we measure our first downward swing with a Fibonacci extension from here to the lowest point and pitch it off the high, we can see we make 100% of our previous downward move and push up to this candle. So we're just going to activate this, project it off of our new high, which shows that we make 61.8% of our previous downward move. So our downward swings are getting smaller and we're coming down to a higher low. So you could take a starter position there. That's something you want to do. And if we carry that theory on, now we're coming down to 61.8% of our previous downward swing and we have a higher low 3 times. So this could be considered a safe entry because we have 3 times coming down to a higher low, plus your 8-day moving average is converging on your 20-day moving average, and our VWAP friend is pointing up. So now that you've determined a safe entry, what do you do with it? You simply take your previous low to high swing, project it off the low, and you can see we make exactly 1282% of our previous upward move. So our upward swings are getting larger, and this is our W setup. So usually when you see this down to this low, you can draw your retracement levels, see if it's at the 28.2 and that's giving it strength, and then take a position somewhere around there. You take a starter position there, you can add in there. You can see we have another W inside this W. So that's why I think W patterns are so profitable. They use the wave, all the orders have been flushed out down to the 282, and the stock is free to move higher.